Hey everybody, welcome back to Ryan Makes Sense. We're going to be looking at stocks from Mexico. Now, I want to forewarn you that there are 9,510 stocks in the whole stock market, and Mexico only has one moment, Mexico, there you are. Mexico only has 16 total stocks, and that's not including shell companies. So given that there are only 16 stocks, we're going to look at all the stocks in Mexico, and we're not going to look at the shell companies. I'm sorry, I don't like shell companies. They're typically used for other reasons, so we're not looking at APXI. We're going to look at ASR, BWMX, CX, FMX. All right, so the first one we are looking at is, you guys can see almost everything. Let's readjust, almost. Geez. All right, there we go. You guys can see everything now. So I like to look at the bigger picture, as you may know. So looking here, we are at the same price, 1851, as we were back in 2022 and also 2013, 2011. So has the company improved by then? I don't know. Or since then? I don't know. This is a telecom company. RSI is at 50, which is standard. I would say bulls are in control. Looking here, while my head's in the way, looking right here, you can see it got as low as 16. Now it's back to 18. Looking at all the different metrics here, strength is about middle. MACD looks like it's actually flipping upwards. Money flow it's been kind of flat. It's at 53 right now. And relative momentum index is actually on its way down. This stock pays almost a 4% dividend. It looks like it is priced correctly for currently, and then in the future, based off the current metrics, it's undervalued. There is a 42% gross margin. That is huge. Ton of shares outstanding. Holy cow. Last year, there was 2.1 billion. Now there's 3.14 billion. Is that a form of dilution? You tell me. Insiders own less than 0.1%. Institutions own 5.99%. I don't know if I'm sold on this company, honestly. It used to be trading around $2, went as high as 29, dipped down to 11, came back, and it's kind of just been trading sideways. Again, this is a telecom company. I don't know what their goal is. Looking here, sales are actually down from 2018. That's a bummer. EPS also kind of all over the place. Nothing really like sticks out and says this is a buy. Yeah, they were doing better in 2016 than they're doing today. So I don't know. Yeah, I mean, I don't. TV. Okay, so it's a mixture. Broadband, IT, TV, over-the-top service. So it kind of sounds like the Comcast for Mexico. And I'm not really into that here. So they're getting beat out by streamers. So we're going to pass on AMX. Although, I mean, it is a solid, fundamentally solid company. They make $45 billion a year. That's incredible. And they're profitable. So, I mean, this is a good company, but long term, I'm not optimistic on television, like as a service, paying for cable TV, landlines. So goodbye, Amex. ASR, this is Airports and Air Services, $235 stock. Ooh, recently had a big dip, all the way down to 150 and recovered up to 235. Did they get bought out or something? Let's see. Government action to amend the tariff-based regulation. So, okay, Can't really tell there, but looking here, this is beautiful. Stair-stepping upwards, also stair-stepping upwards. 5% dividend, that's very solid. It's undervalued today, and in the future it's even more undervalued. I like this a lot. No dilution, it looks like here. Relative strength is okay. Momentum is actually heading downward, so I would wait a little bit. And what I mean by that is, let's see what happens when the stock, what happens here. Let's see what happens at this apex. I have a feeling it's going to go down, but it might not, honestly. Man, this has been trading for a long time. 2002, 2003, it was $9. Now it's $2.50. Wow. Okay. Let's see how much it's actually worth, because I'm truly interested. Okay, so they have a $6,530,000,000 market cap. They have 561,810,000 in income. They're profitable, good for them, plus 1,430,000,000. Now let's add the cash and remove the debt. It is in USD. They have 748,999,000 cash. Debt, they have minus, so 684,280,000. Not bad. Total assets 3.6 billion. Total liabilities 1.135 billion. So assets dwarf liabilities by over 2, which is great. Taking this and dividing it by 27,590,000. A share price of $74.53. That seems way overpriced. Yeah, I think I did my math correct. 6.5 billion plus 561 million is going to be 7 billion, yeah. Plus, what happened here? Oops. So we have the 7 billion. What happened to the 7 billion? Okay, we're gonna redo this because that's kind of annoying. Let's redo this. 6,530,000,000 plus income of 561,810,000 plus 1,400,000,000 in sales. Okay, 8.5 billion plus 748,999,000. Yes. Minus 684,280,000. Okay. Divided by 27,590,000. Okay. There we go. So the stock price is around $311. Analysts have this at $310. That's crazy. I don't know how they do their calculations, but it's pretty crazy how I'm just some random dude who can do it same way they're doing it. So 311, I mean, this is a good deal in my opinion, and it doesn't even include earnings for next year, but this looks so weak, doesn't it? Earnings per share next year, 4.16%. Let's see what happens over here in the next couple of months, honestly. Let's take some notes of this one. Company. Okay, that one looks great. Cool. Betterware Mexico specialty retail, $14 stock. All right, we might have something good here. They make 704 million. They're profitable. They have a dividend. Do they enforce the dividend? I'm gonna find out. Look at this, you guys. Beautiful, beautiful, beautiful. This is a little choppy. Dilution, I don't know. It could be just a fluctuation of ownership. Institutions own 12%, but I'm going to say that's a lie. Fintel, BWMX. I'm going to say institutions own more than that. Institutional buying. Nope, insider buying. Quite big jumps in total revenue. It's a lot. That's big. Just taking a look down here real quick. Total assets, 581 million. Total liabilities, 525 million. That is dangerously close. That's the closest they have been at scale. Wow, actually. That's very dangerous. And how much debt do they have? 314 million. And they make 700 million. Are they doing dividends for real? Dividend. August. So they might have suspended it, which is good. I think they suspended it. Okay, that's good with me. Institutional people own 12.6%. It's kind of just flat right here over the last couple of years. So 12.6% is the new data. Old data is 12.6. So there's a 0.04% increase. But overall, we could wait here. Let's. I'm not a fan of a dividend. They're not paying the dividend. I got to remember that. They're not paying the dividend. So let's just look again at their quarterlies for 2023. That doesn't make sense. So what we're seeing here, it doesn't make sense because 32 million plus 42 million plus 28 million is less than 100 million. This happened before on a NerdWallet. Like when we review NerdWallet, it shows that it's also like this. But with this stock, we can see the money flow is up sharply, which is great. Relative momentum is gained some traction. Now it's chilling. Strength is also just hanging out at 47. Momentum's kind of flat. We're not seeing any really huge volume down here to necessitate like a buy at the moment. I could hold off on this one too. I'm just not a big fan. There's still a lot more downside. The company looks like they're doing okay, but institutions and hedge funds are not amused. So BWMX, it's decent. I would check back. The reason I'm not doing a calculation here, the company was doing a dividend at one point, and I don't think they should have been. And that's just a fundamental difference between myself and the company. Also, their assets to liabilities is frightening. 650 million in assets is last quarter, 576 million in liabilities. That's dangerously close. So we'll wait on that one. Building materials. Wow, this one looks very, I don't want to say predictable, but look, it's been literally in this chop range for 12 plus years. Wow. Like actually, okay. I see something interesting. Let's go here. We could even go like right there. Okay. Interesting. Look at this. The money flow is high. Momentum is high. MACD looks like it's heading down. Strength is high. We're going to calculate this one because I want to see if this has the power. It's got the power. So we can see the shares outstanding at 1.51 billion right here. It was 1.45 billion, and that could just be a fluctuation of ownership in shares. It says institutions own 29%. Let's check. I would say more. Okay, let's run through the calculations. Market cap is 10,880 million. They're profitable, 458.26. Whoa, 458 million, yep. Plus 17 billion 070. That's huge. That's what she said. Okay. And then let's add the cash. This is USD. I think FinViz just updated this to be all USD when it converts, which is awesome. So they have 495 million in cash. Good for them. Total debt, they have, oh, excuse me, 7 billion. That's good. Minus, and I'm only saying that's good because it's realistic for a company this size that's making this much money. Okay, so 21 billion. And just really quickly, assets 27.4 bill, liabilities 16.5 bill. So assets dwarf liabilities 1.5. Not quite 2, but looking back older, like historically, 9. Yeah, looking back historically, like it's kind of been around this range for a while. They have a lot of debt. Okay, and now we're gonna take this divided by 151 billion right there. So this is a stock price of $13.9. It's currently at 7.2. I think that's fine. Yeah, I think this is a solid one, honestly, to just park. If you wanted to park some cash here. If I wanted to park some cash here. It looks like it might be getting ready. Like we have a left shoulder here, head, right shoulder. And now this, this could be a bear flag where we have a flagpole, flag down. Or looking at momentum, it could be something more serious. I'm going to pull out the big guns and we're going to look at the yearly momentum. And this is CX. And we're going to look at the year. And I've already charted this one before. Let's just take a look at it. Oh, silly me. I should have bought at $1.55. Okay, this is the yearly chart, and this is dangerously amazing because look at the MACD here. Once this flips from red to green, momentum, long-term on our side, huge. Huge, huge, huge. And the stock is at 720, and then my calculation is 14 bucks. Analysts have gotten it up to 9 before. This one's at $9.16. I think my valuation is a little bit better, honestly. Okay, so we like CX. MACD. So yearly MACD is ready to flip. You have to, not you, but when you're looking at yearly MACDs, you have to be in it for the long game. You have to be there for a year or 2 or 3 to actually see the move play out. So when we go back here, like this 1, 2, 3, the next 3 to 5 years, it'll take 3 to 5 years for it to go from 7 to probably like 10. But in the meantime, you're seeing appreciation and somewhere to park your cash in a conservative stock. Is it conservative? I don't know. But yeah, this looks like a good one. And institutions own it says the total shares. Yeah, I'm not sure. Let's see. It says 30% here, so I would have to do 512 million shares. 512 million divided by 1,500,000,000. 33.9%. So institutions do own a little bit more than 29%. They own about 33.9%. So about a 4% increase there. So CX has been recorded. I like it. This is Beverages and Brewers in Mexico. Did they get bought out? Why are they stopped? Cash tender offer for Newts. Okay, so I don't think anything happened. But, I mean, it's freaking... It's gone up 100, 200% in about a year. No, in about a year and a half. So, gosh, that's tough. That is really tough. Look how solid this company is, geez. Trading at 10 and 11, goes up 10x. Solid, okay. And even still at these prices, it's undervalued, which is crazy. Crazy, crazy. Man. Just so crazy. I mean, it would be awesome to buy this, but it's like it way took off. It's off. It's way too hot for me to buy now, but like 5-10 years from now, it would be good to look back at this, but yeah, I don't. Let's see, where can we find a pullback? I know where to chart. Looking here, looking here. Oops. Okay. All right, we could see a steep crash probably in 1, 2, 3, 5 years. Around $76, that would be good. But here is the long-term support, this line that I'm touching. Long-term support that goes all the way back to 2019, potentially further back. Yeah, we could make it touch right there. 2004. Yeah, it works. 2004. Crazy. So this is a over a 20-year support line. Okay, I don't even want to chart or find the price target for this one because it's too far gone. it's gone. Okay, let's look at the next ones. KOF, LATG is a shell, OMAB, PAC, steel, TV, oil and gas, yes. All right, I think that's the rest of them. Oh man, this one, I remember watching this one. It's a great company, Coca-Cola. Coca-Cola from Mexico. They do 13 billion, 1 billion in income, good market cap, 4% dividend, just super, super solid across the board. It's perfectly valued at 15. It's undervalued in the future. I mean, here's what it looks like on my charts that I was watching. Yearly MACD is ready to flip. Down here you can see the yearly MACD is ready. So yeah, missed this one from the bottom at 30s, 36. So 40s, yeah, 41. I would still buy this today just because it's getting ready to roll upwards. In my opinion, this is the yearly, by the way. So I do see another year or two moving forward. So I'm just gonna KOF still, whoops. Yep, Mexico. Okay. I mean, I'm not even gonna chart this one out either because, or not chart it. I'm not gonna find the target price because it's well on its way to going back to all-time highs, 162 or 182. I mean, we just missed the 30s and the 40s, so it already went 100% from there. So painful, but good company. OMAB, is there arbitrage here? Ooh, did we look at this one? I feel like this was just the one we were looking at. Maybe not. All right, let's... It's definitely going to keep going down, and you guys have not been looking at the rate. Here we go, right there. Okay. So yeah, going downward, downward. It rounded up at the top and it's heading down. So I am interested in finding the price of this, and do they still have a dividend? A special dividend. It looks like they do. Oh, maybe not. Maybe not. But look at these sales here. Beautiful, beautiful. I would actually want to wait on this one. And I say that because we can find... So once it crosses this line, can I make an alert? Let's make an alert to go if it goes under 50. I mean, I don't even want to make an alert. Let's just note that down. OMAB under 50. Okay, there we go. I'm not even going to price it out because I know it's everything pointed down. Airports and air services, this is literally the same chart we just looked at. And look, everything is pointing down. Same. Correlation right here. Maybe these are ASR. Yeah, ASR, OMAB, and PAC. They're all the same. I'm just going to put OSR, OMAB, PAC. Crazy. Okay. So literally of the 16 stocks in Mexico, 3 of them are related. All right, this is steel. Ooh. Wow. That made a move from $5 to 35. Heading back down, Jesus. Going back down, going back down. Okay. How far down is it going to go? Let's see. Look at these. They must have acquired a steel plant to basically double their output. Okay, let's run the numbers here. 5,270,000,000 in market cap, plus 247,320,000 in income, good for them, plus 2,380,000,000 in sales, correct. Let's look at their cash. It is in USD. Wow, they have 1 billion in cash, plus 1,105,670. All right, total debt, I'm guessing none. Yeah, they have no debt. They have liabilities. They have 3.49 billion in assets and 1 billion in liabilities. That's a 3x dwarfing. Assets dwarf liabilities three times. That's beautiful. This is a well-run company. No dividends, good. And then we're going to divide this by 165,900,000. $54 stock trading at $31. The target price of $22. There, that's some arbitrage there. And then let's look. SIM. Institutions should be buying this. Not quite. Who owns it? Who buys this? Morgan Stanley, Renaissance, JP Morgan, BlackRock. Not huge positions, but BNP. Who has the biggest position? Renaissance Technologies? Holy cow. Renaissance is always early to the party. They literally... It's crazy how accurate they are. I'm going to look and see what the yearly MACD is for this, because this looks Pretty crazy. Ugh. Yearly MACD for this one. It's looking really hot. Feeling hot, hot, hot. Right here. See, right here, it's been really hot. Let's see. Here's long-term support, long-term resistance. Right there. So I based these lines off of the bottom down here. The stock has never closed below this line. And for this top line right here, goes all the way back to 1995. And basically no stock has closed above this line for, gosh, 25 years until it did. Then this candle is the catalyst. It proved that this channel exists. This candle said, hey, whoever's drawing these lines, they're valid because we're going to come and tap here. And you can see it taps here and taps here. As you guys can't see it, damn it. So it taps, it's right at the top of here, right at the top here, right at the bottom here. This is the candle that says, hey, you're doing things right. So now I would want to see a dip back down to 23, but it might not come. Look how strong this is right here. Let's just look. In 2020, the volume for the year was 339,000. 2021, it was 919,000. 2022, 652,000. 2023, 163,000. That's actually a lot weaker than I was thinking. Weird. Okay. I thought it was going to be like millions and millions. So that's awesome. It's still strong in my opinion. So I kind of want to see if it comes down here. And then if I draw another... Okay, so this channel is like our upper bounds channel. So if this stock breaks above this channel, that means the stock is definitely overextended. But I mean, shoot, you never know. So yeah, the stock went from 5 to 38 and maybe more. We'll see. But I do like this stock and we're going to note it down. Okay, and then I just want to see institutions own how many shares? 264,000 shares. 264,000 divided by 165,900,000. No, not that much. Yeah, institutions own 0.159. And then down here it says 0.16. So basically the same. And we're not gonna miss too much if it waits. I mean, if it could come back down to 14, that would be even better. Right here, because we have support right here and support right here. Anyway, we'll check back on that one later, like years later. Ticker symbol TV. Ooh, is this like the Comcast? Let's see. Media products, operates through content, cable, same thing, high speed. Man, that's a bummer. That's a bummer. Gross margins are like 30%, 34%. Oh, it just does not, and you can see their sales are dying because streaming, earnings per share are going down. I'm not even going to calculate this one. They're not even profitable right here. We're going to skip TV. Vista Energy, oh my God. Went from $2 to $31. Holy cow. And it's still undervalued. And look at this. This is just absolutely insane. Absolutely insane. Jesus. Just monster. Like, gross margins are 50%, 53.5. Wow. Damn. And it looks like it's going to be still good. Wow. What are institutions doing? Institutions own a lot. Oh my gosh, look. Look at that. Someone knew something. I mean, just because of that, I think we gotta hold off because it's so hot. Like, geez, where's the next support? Like $10? I don't know. I don't know. Like, this is just pretty crazy to me. Yeah. Double top on the daily. Yeah, this one's nuts. Invest in this one at your own risk. I'm not even gonna. Actually, should I try and calculate it really quick? I think I should. I'm just gonna try and calculate it to see what fair value is. 2,890,000. Okay, that's market cap. They are profitable of 339 million. Good for them. Plus 1,130,000,000. All right. Ooh, their cash situation. Is this USD? Yes, it is USD. And then we're gonna do plus 244.38. Cash or debt, I'm sorry, total long-term debt is 498,250,000. Oops. All right, and then divided by 91,850,000. $44 stock. Analyst target is 43.70. Currently 31. Man, it's just so freaking volatile, you know? And there's a gap. All gaps have been filled. Is that right? Is that a fair statement? Nope. $9 gap. Ooh, down here too. $7, around $6, $7, $9. There's a gap. Ooh, another gap down here. No. Oh, right here. Huge gap at 365. Wow. So, yeah, crazy. I don't know. This could be a fun one to trade on the daily if you're watching that kind of stuff, but I don't know. I'm just going to note VIST could be good scalper. Okay. Crazy. Okay. VLRS, is this VLRS? I don't know. I don't think so. Okay, let's check this stock out. Alrighty. Looks like all-time high around 20 something, all-time low around $3. Okay. They make 3.19 billion, but they lose 76 million. This is obviously choppy. This is beautiful. This is okay. I mean, I guess we can calculate and see what the fair share price is here. Actually, let's look at assets to liabilities. Let's see before we get in. Total assets 4.4 billion. Total liabilities 4.2 billion. I'm gonna draw the line there. That is too risky. Ooh, 2018 was very risky. Man, they were doing so well 2015, 16, 17, and then 2018 they no 2018 something happened big time. Yeah. They've got a $200 million leeway between assets and liabilities. $711 million in cash, total debt $2.5 billion. They could. We're just gonna completely pass on that one. Okay, this is real estate development in Mexico. This could be interesting. Oh, this is beautiful. This is beautiful. What are we missing? Total assets 2.9 bill, total liabilities 1.3. That dwarfs assets dwarf liabilities there. That looks good. Let's calculate this one out because this looks good. So there's a 3,140,000,000 market cap. They are profitable, 307,880. Yeah, 307,880,000 plus 209,120,000. Okay. And let's add cash, remove debt. They have one. Let's look at the quarter. They have 4 plus 408,170,000. Total debt is 929,150,000. This is USD, by the way. Okay. And you guys can't even see my calculations. Sorry. Okay. And I'm just going to take a peek here real quick. So cash. Wow. They have tons of cash. I wonder if they raised at the market, raised some capital. Nothing too crazy here. Initial IPO. So yeah, their stock's up like 20% since IPO. But let's grab this, and we're gonna divide this by 67,970,000. $46 stock trading at 37. Analysts have this at 38 and 42. Mine is 46. What type of real estate in Mexico is this? Let's see. Like hotels, commercial. Let's do English. Industrial parks. Oh, they do industrial parks. Okay. Cool. Why do they want to know my location? So, oh, they have one. Okay. Good for them. I like this one. Although it's still very early in the stock. Like, it's still very early. What are institutions doing? Institutions on 14%. That's old data, new data. No new data. Nothing going on here really there. They own 12.6 million shares. Let's see. 12.66 million divided by 67,970,000. So they own about 18%. Institutional owns about 18%. Old data is 14%. So there's about a 4% increase in institutional ownership. Who do we got? GIC Private. Wow, they own 44 million shares. Wow, look at all these people buying in. Okay. BlackRock. No selling. Wells Fargo. Okay, here's some selling. Blackstone. Morgan Stanley is in. Bank of America. Citadel sold. BNP is in here. No Vanguard? Let's see. No Vanguard. BlackRock is here. Yeah. 1 million shares. Okay. Yeah, I mean, this seems like a doable stock to own, honestly. I would not be upset if I had that in my portfolio. Okay. All right, we just looked at the best stocks in Mexico. Let's see if there is a an ETF that has these stocks and maybe some better stuff. Let's look for KOF. I'm guessing these are going to be dividend-esque ETFs just because the KOF stock has a big dividend. Let's look at the highest allocation of 2.5. So AADR. AADR. And they pay a dividend of 1.46. That's weak. Weak. Okay, that one's a bust. Emerging Sector Dividend Dogs ETF. Oh, hell yeah. E-Dog. I'm going to say this has over a 5% dividend. 6.67, baby. Hell yeah. Nice. This one actually looks interesting. That one actually looks interesting. How much KOF do they have? 2%, 621,000. Okay. Active, yeah. So this E-Dog is the only good dividend one here, in my opinion. Cash Cows ETF, that's funny. E-Cow, let's look at that one. That's funny. 5% dividend, nice. Good for them. With these ETFs, you have to be careful and you have to do your own research, look at their top holdings, and also look at their expense ratios. But a lot of I haven't really seen an ETF that blows me away, honestly. Like this ETF, how's this one gonna do? I don't know. So yeah, do your own research. If you made it this far, consider hitting the subscribe button, consider hitting the like button. Hope you're doing well. Talk to you soon. Bye.